Good morning, everyone. Welcome to our daily financial news update. Let's take a look at the top international financial news stories for today, November 16th. We have a lot to cover, so let's dive right in. Global markets react to latest economic indicators. The financial world is buzzing with activity as markets around the globe respond to the latest economic data and indicators. U.S. markets Wall Street opened mixed yesterday, with investors digesting the latest economic data. The mixed opening reflects the uncertainty and cautious optimism among investors. The Dow Jones Industrial Average and the S&P 500 saw modest gains, driven by positive earnings reports from key companies and a slight uptick in consumer spending, while the Nasdaq Composite dipped slightly. The tech-heavy index faced pressure from declining tech stocks, which have been volatile in recent weeks. European markets. European stocks were mostly higher, buoyed by positive corporate earnings reports and hopes for a global economic recovery. The FTSE 100 in London and the DAX in Frankfurt both closed in positive territory. Strong performances from the financial and industrial sectors contributed to the gains. Asian markets were mixed, with concerns over rising interest rates and geopolitical tensions weighing on sentiment. The Nikkei 225 in Tokyo and the Hang Seng Index in Hong Kong ended the day lower. Investors are cautious amid ongoing trade tensions and economic uncertainties. Oil prices continue to fluctuate. The oil market remains highly volatile, with prices swinging in response to various global factors. Oil prices remained volatile as the market grapples with conflicting signals. Supply disruptions and geopolitical tensions are contributing to the uncertainty. Concerns about slowing global demand and a potential recession were offset by supply cuts from OPEC+. Brent crude and West Texas Intermediate crude both traded in a narrow range. Traders are closely watching inventory levels and production data for clues about future price movements. Central banks maintain hawkish stance. Central banks around the world are taking a firm stance on monetary policy to combat inflation. Central banks around the world continued to signal their commitment to fighting inflation. They are using interest rate hikes as a primary tool to control rising prices. The Federal Reserve and the European Central Bank are expected to raise interest rates again this year. These moves are aimed at curbing inflation, but could have broader economic implications. These rate hikes could further dampen economic growth and increase borrowing costs for businesses and consumers. Tech giants face regulatory scrutiny. Major technology companies are under the microscope as regulators around the world scrutinize their business practices. Tech giants like Google, Apple, and Meta are facing increased regulatory scrutiny from governments worldwide. Issues such as market dominance, data privacy, and antitrust concerns are at the forefront. Antitrust concerns and data privacy issues are at the forefront of these investigations, which could have significant implications for the industry. Cryptocurrencies stabilize after recent volatility. The cryptocurrency market has been on a roller coaster ride, but there are signs of stabilization. The cryptocurrency market has shown signs of stabilization after a period of intense volatility. Investors are cautiously optimistic about the future of digital assets. Bitcoin and Ethereum prices have recovered somewhat, but the market remains highly unpredictable. Regulatory developments and technological advancements are key factors to watch. For more detailed analysis and the latest market updates, be sure to check our website and follow us on social media. Stay informed and make smart financial decisions with our expert insights and comprehensive coverage.